Hey everyone, welcome back.
Yeah.
Today we're going to be taking a deep dive into something that's probably on a lot of your minds, especially if you're, thinking about buying or selling a home.
Definitely a hot topic.
Yeah, the Canadian real estate market.
Hmm.
We're going to be looking ahead to 2025 and trying to get a sense of what we can expect.
Always good to look ahead.
Yeah. And to guide us in our deep dive, we have a really interesting article from Global News.
Oh, yeah, I saw that one.
How high will home prices get in 2025?
Mm.
Depends where you live. Pretty catchy title, right?
Yeah, it's right to the point.
It does, and it was published just last week on January 15th, so it's pretty up to date. So whether you're in the market for a new place, thinking about selling your current home, or just curious about what's going on in the real estate world, we're here to break it all down for you.
Let's get into it.
So let's start with the big picture. What's the overall prediction for the Canadian real estate market in 2025?
Well, both the Canadian Real Estate Association, CREA, and Royal LePage are forecasting a rise in home values.
They are.
Yeah, it's interesting. CREA is predicting a 4.7% increase, which would bring the average sale price to, let me see, about $722,221.
Wow, that's a pretty big jump.
It is, and Royal LePage is even a little bit more optimistic.
Even more.
Yeah, they're predicting a 6% jump by the end of the year.
Okay, so both organizations are expecting prices to go up. But you know what I'm curious about?
What's that?
Why all the optimism? I mean, we've been hearing for a while that the market has been slowing down. So what's changed?
You're right, things have been a bit quiet, but there are a few key factors that are contributing to this potential rebound.
Okay, like what?
Well, one of the biggest factors is interest rates. The Bank of Canada has been steadily lowering interest rates since May 2024, I think it was.
Oh, so they're making it cheaper to borrow money.
Exactly. They've lowered them by a total of 1.75 percentage points, which is pretty significant.
That is pretty big, so I guess that makes mortgages more affordable.
Exactly. Lower interest rates mean lower monthly payments for buyers, which can make a big difference, especially for first-time home buyers.
I see. So that's one piece of the puzzle, lower interest rates. Anything else driving this potential upswing?
Oh, absolutely. Another major factor is Canada's population growth.
Oh, right. We've been hearing a lot about that.
Yeah, we've seen record population growth in recent years, and that's led to a surge in demand for housing, particularly from young adults.
So more people means more competition for houses.
Exactly. More people wanting to buy can definitely push prices up.
That makes sense. But I'm guessing this won't be the same across all of Canada, right? I mean, different regions probably have different things going on.
You're absolutely right. The market rebound isn't expected to be uniform. Different regions are going to experience this differently. For instance, British Columbia and Ontario, which are usually Canada's most expensive markets, are likely to see more activity, but maybe not such big price increases.
That's interesting. Why is that? You'd think high demand would mean higher prices no matter where you are.
Well, in this case, it's because these provinces have a decent amount of inventory available.
Oh, so there are more homes on the market, which could help keep prices from going too crazy.
Precisely.
Okay, that makes sense. So buyers in those provinces might have a little bit more breathing room.
Yeah, potentially. Now, when you look at Alberta and Saskatchewan, it's a different story.
Oh, how so?
These provinces are expected to see a much bigger jump in prices.
Really? Why is that?
Well, they're generally more affordable than, say, BC or Ontario, but they have very low inventory. We're talking like only 5 houses for sale for every 10 potential buyers.
Wow, that's a tight market.
It is, and that kind of competition can really drive up prices.
I can see that. So if you're thinking of buying in Alberta or Saskatchewan, you might be in for a bit of a challenge.
You might be. Now, there's another factor we need to consider, and that's the global economic situation.
Oh, right. Things are always a little bit unpredictable on that front.
They are, and particularly what's happening in the U.S. with the new presidential term.
Yeah, the Trump factor, as some people call it. I know a lot of people are wondering how that might impact the Canadian market.
For sure, and the Global News article does touch on that. There's definitely a lot of uncertainty about what could happen.
Like what? What are some of the concerns?
Well, some experts, like Rishi Sandhi from TD Bank, are worried about potential trade disputes and tariffs, things like that.
Ah, I see. So if trade with the U.S. becomes more difficult, that could have a negative impact on the Canadian economy.
Exactly, and that could then spill over into the housing market. If businesses are affected and people lose their jobs, they might be less likely to buy a house.
Yeah, that makes sense. People are worried about their jobs. They're probably not going to be rushing out to buy a new home.
Right. But on the other hand, some experts, like Phil Soper, the CEO of Royal LePage, think any negative impact from the U.S. would likely be gradual.
Oh, so they're not as worried.
Not as much. They think it probably wouldn't disrupt the spring market too much.
Okay, so it's kind of a mixed bag of opinions.
It is. We'll just have to see how things unfold.
All right, it's a bit of a wait-and-see situation.
Mhm.
All right, so before we get into the nitty-gritty of what to expect in each region, let's take a quick look at where the market stands right now at the beginning of 2025.
Good idea. It gives us a baseline.
Exactly. So what's the latest data telling us?
Well, the national average home price in December 2024 was $676,640.
Okay, and how does that compare to the previous year?
That's a 2.5% increase compared to December 2023.
Hmm. So prices are still going up, but maybe not as dramatically as they were a few years ago?
That's right. But to get a more accurate picture, we need to look at the CREA National Home Price Index.
Okay, and remind me again, what's the difference between the average price and the index?
Sure, the index takes into account the types of houses sold and where they're located. It gives us a more sophisticated understanding of price trends than just a simple average.
Ah, so it's a little bit more nuanced.
It is, and according to the index, prices increased by more modest 0.3% for 2 months in a row.
Okay, so while the average price shows a bigger jump, the index suggests a more gradual increase. Got it. Now, what about if we break things down by property type? What did we see at the end of 2024?
Well, the median price for a detached single-family home in the fourth quarter of 2024 was $855,900, while condos were selling for a median price of $592,700.
Okay, so quite a difference there between detached homes and condos.
Definitely. And these figures give us a solid starting point as we look ahead to 2025. So with that in mind, let's dive a little deeper into those regional variations we were talking about.
Sounds good to me. Let's do it. All right, so we've talked about, kind of the national picture, what's driving the market this year. But we all know real estate's all about location, location, location.
It really is.
What you see in one city can be totally different just a few towns over. So let's zoom in a bit, explore what this global news article tells us about specific regions across Canada.
Okay, sounds good.
Starting with the prairies, Alberta and Saskatchewan are expected to be like real hot spots this year. We talked about how they have like really tight inventory.
Yeah.
That's right, really tight.
Only 5 houses for every 10 buyers, which is going to create some serious competition for those trying to, buy a place. But wouldn't that also make it a seller's market?
That's the thing.
If I'm selling my house in, say, Alberta, wouldn't I be in a great position to get a, pretty high price?
You would think so, yeah.
So it's a win-win for sellers then.
Well, not so fast. It's a bit of a dilemma, actually. Yeah, sellers might benefit from the high demand, could potentially fetch a higher price,
Right.
but they also have to think about where they're going to go next.
Ah, makes sense.
If they're planning to stay in the same area, finding their next home is going to be just as challenging, if not more expensive.
Ah, I see. So it's not a simple win. They got to factor in that cost of buying their next place, too.
Exactly. It's a trade-off.
It is. Okay, so now contrast that with what's happening in Toronto,
Right.
Canada's largest city, also expected to see a, rebound in activity. But, they have all those condos, especially downtown.
Tons of condos. And that's likely to moderate price increases, the article says.
Yeah, that makes sense.
But wouldn't all those condos also mean more competition for sellers?
That's a good point.
Even if prices don't go through the roof?
Yeah, it's a complex dynamic.
It's like, wouldn't everyone be trying to sell their condo in that kind of market?
You would think, right? But a large inventory like that, yeah, it might temper those price increases overall.
Right.
But it also means sellers need to be more strategic, I guess you could say. They'll need to make sure their condo stands out, maybe focus on upgrades or unique features, competitive pricing, to attract buyers.
So in a way, having all those choices for buyers could actually make it tougher on the sellers.
You could say that.
You can't just assume you'll get top dollar just because the market's, busy.
It highlights the importance of working with a knowledgeable real estate agent, I think.
Yeah, someone who knows the ins and outs.
Someone who understands those local market nuances. Yeah, whether you're buying or selling.
Good point. Okay, so what about those other regions? What's the article say about places like Quebec, Manitoba, the Atlantic provinces?
Right, right. So it seems like the outlook for those regions is a bit more balanced, I guess you could say. They're not expected to see the that same intense competition and price surges as, say, the prairies,
Right.
but they're also not likely to have that moderating effect of a large inventory like Toronto.
Kind of middle of the road.
Yeah, projected to fall somewhere in between those extremes.
Okay, so maybe a bit less dramatic than Alberta, Saskatchewan, but still some potential for growth, it sounds like.
Yeah, I think that's a fair assessment.
It's really interesting to see how different these regional markets can be,
Yeah,
even within the same country.
definitely shows you the importance of local expertise in real estate.
Yeah, big time. Someone who really knows that specific region, it can be so valuable, whether you're buying or selling.
Couldn't agree more.
All right, so we've talked about interest rates, population growth, those regional variations, but there's one more factor we need to address, kind of a big one.
The elephant in the room.
Yeah, exactly. The global scene, and specifically what's happening, down south with the U.S.
Oh, right. That's always a factor.
You're talking about the potential impact of the new U.S. presidential term.
Yes, definitely something a lot of people are wondering about.
Yeah, and it's something to consider when you're looking at the Canadian housing market.
Absolutely.
Because, what happens if trade relations between Canada and the U.S. Become a little bit strained?
Right, exactly.
Could that, have a ripple effect on our economy and then ultimately on real estate?
Well, it's definitely a possibility. Some economists are concerned that potential trade disputes, tariffs, those kinds of things, they could slow down economic growth in Canada.
Yeah, I can see that.
And then, if businesses are affected, jobs are lost, it might make people a little less confident about, making big purchases, like buying a house.
So that uncertainty around U.S. trade policies could make some buyers, hesitant.
It's understandable.
But it also seems like a lot of this is just speculation, right?
Yeah, we don't have a crystal ball.
You don't really know what's going to happen.
True, a lot we can't predict.
Mm-hmm.
But it's good to be aware of the potential risks.
To be prepared.
Yeah, exactly. It can help you make more informed decisions.
Right.
So if you're thinking about buying a house, yeah, you might want to factor in the possibility of some economic fluctuations.
So proceed with caution, but don't let fear paralyze you.
Exactly. Stay informed.
Be aware of those risks and then weigh those against your own, personal circumstances and your goals.
Every buyer and seller has their own unique situation, right?
Exactly.
What makes sense for one person might not be the best choice for another.
Totally.
Okay.
It's about finding the right balance. Okay, so we've covered a lot of ground here. Interest rate trends, population growth, those regional variations, and the potential impact of U.S. trade policies. Now, I want to shift gears a little bit and talk about what this all means for you, our listener. So we've covered a lot of ground in this deep dive.
We have.
Talked about national trends, those regional variations, even some global factors that could be impacting the Canadian real estate market in 2025.
It's a lot to take in.
It is, but, at the end of the day, this isn't just about numbers and statistics.
No, not at all.
It's about people's lives.
Their dreams, their financial futures.
Absolutely.
And I think understanding how the real estate market works can really help people make those, those informed decisions.
Right. Decisions that align with their own goals.
Exactly.
I love that point, that it's not just about the market itself. It's about how it impacts real people.
Yeah, for sure.
And I think this deep dive has really shown that there's no one-size-fits-all answer when it comes to real estate.
Absolutely not.
Your strategy, it should be based on your own situation.
Your risk tolerance.
Yeah, all of that.
Your long-term goals, for sure.
Absolutely. Think of the real estate market almost like a reflection of what's happening in society.
That's a good way to put it.
Things like population growth, those interest rates we talked about, government policies, even global events. You can all have an impact.
They all play a role.
So as we wrap up this deep dive,
Mm-hmm.
I want to leave you with a question to think about.
Okay.
We talked about how interest rates are expected to stay low.
Right. At least for now.
But we also discussed that uncertainty surrounding potential trade tensions with the U.S.
Yeah. That's the big question mark.
It is. So how will these competing forces play out in the coming months? Will the appeal of those lower interest rates outweigh the concerns about, that global economic instability?
$1 million question right there.
It is.
And to be honest, there's no easy answer.
Yeah.
It's a complex situation, lots of moving parts.
Right. So what's your advice to people out there who are, maybe trying to navigate all of this?
I'd say, first and foremost, stay informed.
Stay informed.
Yeah, do your research. And if you're seriously considering buying or selling, Talk to a trusted real estate professional,
Yeah, get that expert advice.
someone who can give you that personalized guidance. Yeah.
Solid advice. And remember, just like the real estate market, the deep dive is always full of surprises and insights.
Always something new to learn.
It is. So stay curious, keep learning, and we'll see you next time for another deep dive into a fascinating topic.
Looking forward to it.